Hey traders, checking in on the stock market today. We had the tech sector up, the financial sector and healthcare sector were down, so a bit of tug of war as far as the broader market is concerned. I'm wearing pieces of glass over my eyes, which means my analysis is going to be more intelligent than usual. Stay tuned and I'll prove it to you.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So SPY on the daily time frame was a little inside bar. If the inside bar breaks bearish tomorrow, daily consolidation is underway, and for me, our line in the sand is 359.17, so the bulls have multiple percent to work with where we could pull back and still hold that level. The futures chart on the 4-hour time frame is a nice equilibrium. This is what I'm watching overnight tonight. We have our high, low, lower high. The bulls are trying for a higher low here into the end of the day, and watching to see if we get a break overnight, and if we don't, we will likely be on the verge of a break first thing tomorrow morning. 4-hour EMA 12 support continues to hold, the higher lows continue to hold, and we know the burden of proof is on the bears to prove anything to us. And when we have days like today where some sectors are going up and some sectors are going down, that keeps the broader market healthy. We know the only real significant weakness that we will see in the broader market is when we are seeing weakness in all of our major sectors and they go down in unison. And that was not the case today. So 4-hour equilibrium on the futures chart. IWM, daily time frame, new all-time high. Again, not a huge range, not a whole lot going on today. And if we break the low of 187.44, we then look for the daily higher low compared to 180.32. Multiple percent of space to work with for the bulls to try and maintain the daily uptrend. QQQ, blue sky breakout all-time highs, lead bulls today with a strong close. And that's that. Bulls are extremely strong. Line in the sand for me is 294.78. Lots of space to work with, over 3%, and a very strong close. That being said, as far as the tech sector is concerned, not all names are created equal. We have some names standing out for strength over the last 2 weeks. So first, let's look at QQQ. All right, blue sky breakout, 2 weeks all green, all bulls. We look at Apple and say, okay, it's doing the same thing. It's strong. Little bull flag confirmed. Weekly equilibrium. Bull break last week, trying for follow through this week. Okay, that makes sense. It's correlated to QQQ and doing the same thing. But then you have names like Microsoft doing nothing but trading sideways, and Amazon, nothing but pulling back. So I always say, if we're not going to go up in the most ideal market conditions with the S&P 500 and QQQ both at all-time highs at the same time, aside from individual surprise news that would ignite the bulls, we're just sitting here waiting for further pullback because we know that the next time QQQ sees daily consolidation, Amazon and Microsoft are not positioned well to pull back from these levels. So looking at Amazon on the weekly time frame, if we're not breaking bullish on this weekly time frame in this current market environment, what's it going to take? Again, aside from news, hard to imagine what would ignite these bulls if they're not being ignited in the last 2 weeks. So just something to be aware of. I'm not going to go bearish these names, but if the market started to show a significant weakness for the rest of the week, these would be the first names that I look to as far as the tech sector is concerned. The financial sector pulled back today. Anything above 27.83 is a higher low. That's about 3.5% of space for the bulls to work with. And the daily uptrend is our guide. So no major red flags. Daily EMA 12 support, a visual guide as well. And best case for the broader market would be both XLV and XLF setting daily higher lows right when QQQ starts daily consolidation, and then just do that inverse swap game that was done today with XLF at the low of the day while QQQ was at the high of the day. So inside bar on XLV, if it breaks bearish, daily consolidation is underway for the first time in a week and a half, and we'll look for a higher low compared to 107.84. Biotech sector, really strong start to the day, but also a big upper wick from all-time highs. We are still in an hourly uptrend, but the size of the pullback was significant enough that we will be watching for the potential hourly lower high tomorrow. Aggressive bears looking at that hourly lower high for a potential top fish. But anything above 130.84 is a daily high or low, keeping the bulls in complete control. SMH all-time highs, daily high or low every day the last 5 days. When that breaks, plenty of space for a daily high or low to form. So hourly uptrend keeping the bulls strong there. Solar sector is showing some weakness as well. Again, if the broader market strength the last 8 days is not helping these bulls, 6 days, what's it going to take? We're holding the EMA 12 support, so that's one positive here. But bears are going to be watching for a daily lower high compared to 88.35, that recent top. And if we were to fail that recent top and then break this low of consolidation of 79.67, that confirms a daily downtrend, and we would then zoom out and look for a weekly higher low to try and form. So not a whole lot of confidence in the solar sector here, and keeping an eye out for that lower high compared to 88.35. The VIX, higher open. What's the pattern we're seeing on higher opens? They sell off. It's happened now twice in the last 4 trading days, 5 trading days. No follow through for the bulls on higher opens. So we're leveling out a little bit. We had the downtrend. We were watching our 4-hour downtrending support line. And now we're just leveling out, trying to form a bit of a rounded bottom. But you look at this daily chart, and it's still extremely weak with daily lower highs. And actually, you know what? I take that back. We did break a little daily 2190 resistance level, but couldn't get over 2290, rejecting from daily EMA resistance. And essentially, it looks like we're seeing some hedging going on in the volatility index as people establish some positions with the market extremely strong. UVXY just sideways. So pretty much going from a steady downtrend to now just sideways as we see a bit of hedging going on. And it's definitely a good time to be hedging. Again, if you have a long-term portfolio and we're up at all-time highs and we haven't seen any weekly pullback in the last 5 weeks, not a bad time to just be a bit protective. The dollar, daily is a potential bear flag. The bounce got underway. The RSI is cooling off a bit, but there is absolutely no follow-through on this bounce at this point. There's a big upper wick. There's daily EMA resistance. There's daily lower highs. So this bounce is proving nothing to us. And with this weak bounce, the metals are seeing follow-through. Today was a very conviction-led day for the metals. And you can look at this and say, that's a daily trend change. We formed a little higher low and higher high. And that would be fine. I wouldn't argue with you on that. But for me personally, when I see that, because we're coming from a downtrend, we were in a daily and a weekly downtrend in gold. So to be coming from a daily and weekly downtrend, that's not going to cut it for me as far as a clear pivot and a clear trend change. GDX is different. The miners here pulled back for multiple days. They set a clear little higher low and then saw continuation. And that's different than just one little day of pullback and then straight into continuation. So if we were in an uptrend, and if this move was coming off, if we just set an all-time high, then I would say, yeah, that's our new daily higher low level because there's no other support nearby, and we're going to use that level. And that's me giving the benefit of the doubt to the bulls because they've been proving it to us in a prolonged uptrend on multiple time frames in the past. But because that is not the case, and the bulls need to prove it to me because we're coming from a downtrend, it just makes me a little bit more picky. So I can just condense it down to the 2-day time frame and say, okay, well, it's a V-shaped bounce. It's nice. It's a great bounce, absolutely. But there's still proving to be done here for me. And as a patient bull, again, I had some really nice gains in 2020 playing this leg up. Where are we? This most recent leg up. And I made an attempt, and I'm going to do the exact same thing. So my attempt was on the daily time frame. I said, all right, that bounce is big enough where I'm looking for a daily higher low entry, and I'm using the low as my stop. And obviously I stopped out of that. Small loss, gave back a fraction of the profits, maybe 5% of the profits at most that I've made on the year. And I'm going to do the exact same thing. I'm a patient bull here, and I'm waiting and watching this weekly bounce and saying, okay, anything under 1966 is a weekly lower high. That's $100 from where we stand. So if the bulls bounce and get followed through, that's great. I will be patiently waiting for a weekly higher low entry. I will use this low as my stop. If I'm right, we'll change the weekly trend and head back to the all-time high. If I'm wrong, I will stop out with a small loss, giving back a fraction of profits again. And I'm fine doing that, being protective and patient. I do want metals. I do want a metals position. Just looking for monthly EMA 12 support, all-time high, definitely still within striking distance. Dollar weakness, unlimited printing, all that narrative. Absolutely want metals positions. And I do have metals positions, but I want more. So I'm being patient and looking to add to them. Silver, same thing, little lower wick straight into a big bull move. The difference with silver is a weekly hold of support. 2166 holding is a big difference than what gold did. And now we're looking back up at 2601 resistance, and that was a really nice double bottom. And if we look at the monthly time frame, it looks like our monthly higher low is forming. The question from there is, can we go straight to a higher high over 2986, or do we form a tightening monthly range into Q2 2021? That remains to be seen. A solid bounce off the lows, no doubt about that. Weekly trend changes are what I need to see from here. Miners, daily trend change, zoom out. Anything under 4181 is a weekly lower high. And again, it's the same thing. We need a weekly trend change if we're going to say, yes, our monthly higher low is being set on these miners off of EMA 12 support. Oil had a bull break to end last week, but a lack of follow-through. The most important daily support is 43.92. If that holds, the bulls keep complete control, and they definitely want more follow-through after only breaking resistance by 40-some cents, about 1%. So we need more than that. Daily higher lows are key. Natural gas bears keeping their control. Daily RSI approaching oversold. On any bounce, we're looking for a 4-hour lower high under 2514. And at this point, daily oversold conditions may be coming into play. And if we get those, 2314 will break. Next level, there's no clear price level until the 190 range. So daily oversold conditions when scouting for a monthly higher low, not necessarily a bad idea, but we'll keep an eye on it. A very clear momentum shift obviously has taken place over the last 4 days in natural gas. So a little bit of trade review here. Got to set it up real quick. So we're going to go over QQQ here and early pattern recognition. Pretty much going to go back in time and look at the messages that I was posting as this trade was setting up. I didn't even take this trade because I was hungry and it was lunchtime. But we had a big bull move to a new high of the day straight into a pullback. And looking back at the chat room, let's see, 11:39, QQQ 306.75 support approaching, 15-minute head and shoulders watch if it holds. So that's at 11:39. So at that point in time, we are right here. So we're coming down towards that support. This is the support I'm looking at, 306.75. So that's our key level that we're looking at. And I anticipate that, okay, if that support level holds, it's a big enough pullback from the high of the day, going to the 15-minute time frame now. It's a big enough pullback from the high of the day that we are then looking for the potential of a lower high to form compared to the high of the day, and then a rollover to confirm that trend change. And we didn't get a good one on the 15-minute time frame. We went straight from the high of the day and then pulled back significantly. But if you were zoomed in, you get that detail a little bit better where you have the left shoulder. The size of the pullback was notable, but we did hold that support. We dropped down to 306.95. We held support by 20 cents, a very quick little lower high, and then we rolled over and took out both support levels. And then from there, the bears had control for the next few hours. So we saw the pullback. I saw the setup where if that support level holds, watch for that potential right shoulder to form. Next message was QQQ watching for a potential right shoulder on the 15-minute time frame. And again, the 15-minute was not the best view because it was too condensed. If you go down and look at the 10-minute time frame, that's probably going to be the ideal time frame to be watching it on. Even then, just not a real clear right shoulder. Only the 5-minute time frame had that clear right shoulder, but it was a failure to break the high of the day, confirmed 5-minute downtrend, confirmed break of 15-minute support, and then bear control from there. So the head and shoulders play is when you recognize it, you short the bounce and you top fish the high of the day at that point. Because if I'm wrong and it's not a head and shoulders, we're going to break resistance and then I stop out. If I'm right, we don't break that resistance. We form the lower high compared to that level and then we roll over. So the time frame, I had the time frame wrong as far as where it was most clear, but it was a number of factors. Hourly time frame. So we just started the morning, all bull. We know to be watching. We went from 304, the low pre-market, all the way up to 307. So a 1% move with no consolidation. So we know hourly consolidation could be happening at any point. So I have that in the back of my mind. We then have that 5-minute setup with a significant pullback off of the high of the day. set that 5-minute lower high, and then we took out both support levels, 306.95 and 306.75, within the next 10 minutes from there. Bounce to just another lower high, roll over, lower high, roll over. 5-minute oversold conditions. We know we're looking for an hourly high or low from there. And then I made another post right about here. What time was that? 2 p.m. And at 2 p.m. QQQ 5-minute, nope, one more before that. I am personally done for today, but I would be interested in a QQQ play off of 306 here, looking for an hourly high or low. So 2:03 p.m. And that was right here. We're looking for this 5-minute high or low, size of the bounce significant enough to look for the 5-minute high or low, confirm the 5-minute trend change, hourly high or low is set. So again, in the back of my mind, both of those short-term trade setups were based on what I feel is the more probable scenario of what's going to happen on a longer-term time frame. Knowing that hourly consolidation is likely going to take place at some point today, and the 5-minute head and shoulders aligning with that, and then knowing that an hourly high or low is the most likely scenario from there, and the 5-minute trend change back to the bulls aligning with that. So always start on the longer-term time frame to determine what is the most likely scenario, and then zoom into the details from there. I've been talking about DKNG for the last week, looking for weakness while the bulls were still in full control. Why was I looking for weakness? Because when you see this kind of volatility, you know to be scouting an equilibrium, and the most likely scenario on this bounce was a weekly lower high compared to the all-time high and a pullback to look for a higher low. So even before there was any weakness, I know that I'm watching for a loss of the daily uptrend to indicate that weekly lower high has been set. And I missed it because this little bounce was a bit too quick for me. Just a very quick failure at continuation and then rolled over. But now we've got that weekly consolidation, and at this point, I know to be scouting a weekly high or low compared to 34.90 sometime over the next couple of weeks. Bigger picture, longer term, what's the most likely scenario, and then zoom in from there and find the details of what needs to happen to make that the most likely scenario playing out. That's it. Have a good day. Do good things. See you tomorrow. Greenhouse update. I thought we were going to lose the lettuce because it got down to the low 20s. This greenhouse doesn't really retain heat well, but I covered everything with the remake cloth, and it looks like it did pretty well. Cabbage is probably getting close. Garlic's popping up. We ended up planting maybe 400 bulbs of tulips and daffodils along the creek here with the help from Mod Jungle Funk from the chat room. It's gonna be good in the spring. Cabbage left to rot turns into an alien egg.